As we had a high in 2007, the market put in a nominal new high, and then it ended up selling off, and it had about a 20% pullback as that first crack to the downside. And as the stock market was topping in 2008, it had already gone sideways for about a year, year and a half. And that was gold more or less traded sideways in that bullish pattern. That was when stocks took off, real estate took off, bubbles, it felt like they were everywhere and everybody was a hero making tons of money. Yet just in the final few months of the stock market starting to push to new highs, gold joined in on the rally, and then gold shot higher and became the number one top performer, and everybody wanted gold. And, it's interesting, if I was to pull up the dollar index on here, take a look. If we drop the dollar index on here, the green line, the dollar was down at the bottom. Nobody wanted it. Everybody said the dollar was going to implode, the whole fiat currency scenario. Nobody wanted it. And so if we fast forward to where we are today, we have a very similar type of price action. We have a high on the chart right here, draw. We have a nominal new high. We did see the stock market have a 20% correction. Now we're bouncing up, but just similar to this double bottom and this move sideways. We're having a strong bounce right now. And of course, we have gold trading up. Gold has surged and taken off right as the U.S. stock market was just hitting new all-time highs. Gold's been leading the way. And then if we look at the dollar's in the lower right-hand side again, obviously way off those highs, and it's hated. Everybody hates the dollar. Everybody's fearful that it's going to fall just like previous. So this is a really interesting comparison. Scratch out, what's going on with banking system in 2008 and the housing crisis. If you just look at it as price and emotions are the same. Price is going up or down. People are either fearful of losing money or they want to make money. And so when you look at the charts, it really does take the news out of things. And that's why I love technical analysis, because I can look at it through the lens of what are people doing with their money? Where are they moving it? Pulling it out of the dollar, going into gold, getting out of stocks, or chasing high-tech stocks or growth stocks. And what's interesting right now is we actually have a lot of people moving into high growth stocks, like the ARK ETFs, uranium stocks. There's a whole bunch of different pockets. Uranium's got a little more news to it, but a lot of aggressive stocks. And that's what happens near major market tops. People move into the aggressive stuff thinking we're going a whole lot higher. Meanwhile, it's potentially the end is near for a big market correction. So, if I was to fast forward, what happens with in 2008, obviously the stock market fell 57%. Gold pulled down naturally with it about 34%. It ended up finding a bottom way before the stock market did. And then, of course, gold eventually took off and shot higher. So I believe we're going to go into something similar, whereas the price of the stock market is eventually going to roll over. I think gold will eventually get pulled down with the bear market and the forced liquidation margin calls. And then I think we'll see it take off and start another major super cycle to the upside. But I think those two comparisons are really interesting because the charts are very similar. They're not identical, but they sure have the same characteristics and the same feeling as the last major market top, the last stage 4, just before we went into a stage 4 bear market.
It's fascinating stuff, Chris. I'd not seen all that before. I'm sure everybody watching is like, whoa, that's a compelling thing to look at. If in the short term, that dollar continues lower, though, and breaks down, like you said, as a possibility, that 98 level seems to be important. We're probably going to get ourselves at least a summer rally. You'd mentioned some higher prices for gold a few minutes ago.
Yep.
In the short term, what could we see happen?
Yeah, I mean, this is the monthly chart of gold. Obviously, it is in a raging bull market still. It's just had a more or less a month pause, and now it's on the verge of popping and extending higher. So I'll just drop to the daily chart, and we can just grab the price action just off this most recent, this standout low on this chart up to this high. Mm-hmm. Now, this is using Fibonacci extension. This is going to measure to the upside where gold has that potential to run to based on this pattern. So you can see this pattern here is pushing to about 3660 based off this overall pattern. Depending where we want to say that move started, we could go somewhere over here. This is kind of a little bit more of where panic selling hit that stock market back in April, where there was 3 or 4 days where the stock market just free fell. Everybody was dumping shares. And it's a perfect example how it can hit gold. While gold may
Right.
be the better play, it still got hit three
Right.
days in a row with big, heavy volume selling. And that's what happens in a bear market. We have extended periods like this, and it'll naturally pull gold down. But more or less, we're pointing to somewhere around this 36.60 all the way up to about 37.80, somewhere in that range for this next upside target move. So when we look at this chart pattern, obviously it's had a big move up. We've got gold flagging sideways. A flag is known as the halfway point, and so from the low of that flag is usually where that full move could go. And so that's kind of what we're setting up for. So there's a lot of nervousness in the market. If stocks start to fall down, start to struggle even more, people are going to move to gold and flock to safety. And that's where people tend to go just before we have a big financial crisis. We saw this in 2008. People are worried about the financial system, so they get out of it and they buy gold pet rocks
Yeah.
and silver
Yeah.
pet rocks to store for a while, right?